studying your last two. I swim med when they turned in. The styrene down to mute. And can learn the pole that sunk he died.
Schedule 125 is the GIFI income statement that accompanies the T2 corporate income tax return, while Schedule 100 reports the corporation's financial position at the end of the year. Schedule 125 reports its financial performance during the year by summarizing revenue, expenses, and the resulting net income or loss. The process begins with the corporation's own income statement. This financial statement is prepared from the accounting records and reflects the company's revenues earned, expenses incurred, and the net income generated during the accounting period. At this stage, the corporation is still using its own chart of accounts and the account names defined within its accounting system. The next step is to convert the income statement into Schedule 125. During this process, every revenue and expense account is assigned to the appropriate GIFI category, whether the corporation uses QuickBooks, Sage, Excel, or any other accounting software. The financial information is translated into the standardized GIFI format required by the Canada Revenue Agency. Once the income statement has been organized into Schedule 125, it becomes part of the corporation's electronic T2 filing. Because every corporation reports its profit and loss information using the same standardized GIFI structure, the CRA can process, analyze, and compare financial information much more efficiently. It's important to understand that Schedule 125 does not replace the corporation's income statement. The corporation continues to prepare its financial statements using normal accounting principles and its own chart of accounts. Schedule 125 simply converts that information into a common reporting format so that every corporation reports its financial performance in a consistent manner. The key takeaway is that Schedule 125 acts as the bridge between a corporation's accounting income statement and the CRA's reporting system. It standardizes revenue, expenses, and net income into the GIFI format, making electronic filing more efficient, improving consistency, and allowing the CRA to process corporate tax returns accurately and effectively. Every income statement tells the story of a corporation's financial performance during the year. It shows how much money the business earned, how much it spent to operate, and whether it ultimately made a profit or incurred a loss. Schedule 125 follows this same structure by organizing every income statement account into three major sections: revenue, expenses, and net income. The first section is revenue. Revenue represents the money earned by the corporation from its business activities. Depending on the nature of the business, this may include sales revenue, service revenue, interest income, rental income, or other sources of income. Revenue reflects the inflow of economic benefits that increases the corporation's resources during the year. The second section is expenses. Expenses are the costs the corporation incurs to earn its revenue. These may include salaries and wages, rent, advertising, insurance, office expenses, professional fees, utilities, and many other operating costs. In simple terms, expenses represent the outflow of resources required to run the business. Once all revenues and expenses have been recorded, the corporation calculates its net income. Net income is determined by subtracting total expenses from total revenue. If revenue exceeds expenses, the corporation reports a profit. If expenses exceed revenue, the corporation reports a net loss for the year. This relationship can be summarized by a simple formula: revenue minus expenses equals net income. This is one of the most fundamental concepts in financial accounting and forms the basis of every income statement. When preparing Schedule 125, Every income statement account is assigned to one of these three major categories. Whether the corporation records sales, advertising costs, salaries, or insurance expenses, each account is organized into the appropriate GIFI category before being reported to the Canada Revenue Agency. The key takeaway is that Schedule 125 does not introduce a new way of preparing an income statement. Instead, it standardizes the corporation's revenues, expenses, and net income into the GIFI format so that every corporation reports its financial performance using the same consistent structure required for the T2 corporate income tax return. Every corporation maintains its own income statement using the chart of accounts defined in its accounting system. The names of revenue and expense accounts may vary from one business to another depending on the accounting software, industry, or internal reporting preferences. Even though the account names may differ, they must all be translated into a standardized format before being reported to the Canada Revenue Agency. The process begins with the corporation's accounting software, where all income statement accounts are recorded. These accounts may include sales revenue, service revenue, interest income, rent expense, salaries and wages, advertising, insurance, professional fees, office supplies, and many other revenue and expense accounts. The next step is the Schedule 125 mapping process. During this stage, each accounting account is matched to the appropriate GIFI category. For example, sales is reported as sales revenue. Interest income is classified as interest revenue. Salaries are mapped to wages and salaries. Advertising is reported as advertising expense. Insurance is assigned to insurance expense. And professional fees are reported under the corresponding professional fee category. The purpose of this mapping is not to change the financial information, but to organize it according to the standardized GIFI structure required by the CRA. Once every income statement account has been mapped, the information is assembled into Schedule 125. The completed schedule presents the corporation's revenues, expenses, and net income in the standardized GIFI format and becomes part of the T2 corporate income tax return submitted electronically to the CRA. Without this standardized mapping process, corporations using different accounting software and different charts of accounts would all report their financial performance in different ways. This would make electronic processing and comparison much more difficult. By converting every income statement into the same GIFI structure, Schedule 125 ensures that all corporations report financial performance consistently, regardless of the accounting system they use. The key takeaway is that Schedule 125 does not replace a corporation's income statement or modify its accounting records. Instead, it serves as the bridge between the corporation's internal accounting system and the CRA's reporting requirements by translating revenue, expenses, and net income into standardized GIFI categories. This standardization makes electronic filing more efficient, supports accurate tax reporting, and allows the CRA to process corporate tax returns consistently across all Canadian corporations.